Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Tuesday, March 25th. After reaching a 13-year low in January, another modest decline is expected in February new home sales. The rise in existing home sales in February does not provide much insight given that new home sales lead existing home sales given the earlier timing of the contract signing than the resale closing. The January figures included a multi-decade high inventory supply of 9.9 months as prices fell 15% from a year ago and were down 18% from the March 2007 peak. The price decline will continue in February as the supply of unsold inventory could tip in either direction. The sales pace has fallen nearly 60% since the peak. The drop in prices aids the return of buyers, but foreclosures are an added concern given the small down payments included in earlier subprime mortgages. Lower prices can put the value of the house below the mortgage loan value, providing an incentive to foreclose. Increased foreclosures boost inventories and leave a downward effect on prices, and the cycle continues. Moreover, price declines encourage buyers to wait for a bottom, further delaying the upturn in demand. Housing has long been in recession and will continue to weigh on growth. The timing of stability in the housing market varies among housing professionals from this spring to a turn higher in 2009 or 2010. Briefing.com looks for a 3% decline in February to an annualized rate of 570,000 home sales. The market is more optimistic with a smaller decline to 580,000. Both estimates, though, translate to a new 13-year low. The housing recession is no surprise to the equity markets and should not provide much trading direction unless the new home sales report shows an unexpected rise or a much larger than expected decline. Consistent with the rise in existing home sales, the market may read an increase in new home sales or a smaller than expected decline as evidence of growing stability in the housing sector. We should add that February seasonal adjustments are large and may explain the lift in resales. Rising foreclosures, falling home prices, bloating inventories, and absent demand extend expectations for a turn higher to mid-2008 at best. I'm Pat O'Hare for Briefing.com. Thanks for listening.